Hello, everybody, and welcome back to another podcast with the crew at Farmers Trading Company here. Just wanting to bring you a midweek update. Our plan is to hopefully make this a routine where we do this every Wednesday. So be on the lookout for videos there and feel free to subscribe to our YouTube channel. That's where they will all go when we're done with them. So if you want the latest updates, feel free to check out the YouTube channel. Otherwise, they will be on the website shortly after they go on YouTube, but there might be a little delay there. So the quickest way you're going to find them are on the YouTube channel. And feel free to like those videos too. That helps support us and support what we're trying to do here. But with that being said, I guess we'll roll right into it here. It's Wednesday the 14th. Looks like it was mostly lower in the egg commodities, with the exception of the hogs, but everything else pretty much in the red today. Kind of an ugly day. I think we'll get started with the grains here first. I guess what are your thoughts with the corn market here, Vince? It really took a beating. It was up the last couple of days, but just kind of fell out of bed today. What can a guy make of that?
I think a couple of things, Connor, last week is we had discussed and then we broke out of some of our January low timing from GAN in there, which would really tell us for the next 3 to 4 months, we probably stay at these prices or lower. And you had 4 or 5 days, whether it be corn or beans, that you kept bouncing off a bottom. And typically the old adage would go that if you knock on the door enough times, you're going to break through it, which we really did on Wednesday morning. Now we see where we're at. I think you're going to look at it, corn. For one thing, we have to look at the longer term ideas that we are due for a 5.7 year low late in that third quarter of 2024. And with the 15% window, that gives you about 10 to 11 months either way. So you're in the window where you could be putting a bottom in. But right now, just don't see a lot that would tell us that's what we're going to do.
And with that being said, I don't know. Do you have any other things you want to add? I mean, it seems like it was a pretty quiet week overall with news here, Andrew. But was there anything else that you saw that you found interesting?
Yeah, if you want to be a technical trader as far as what this thing is doing, if you open up like a March corn chart and you draw a trend line off of some of the lows that you had in November, both early and late November, and some of those even in early January, we are still within that channel that we have drawn there. So we're towards the bottom end of that. So whether or not we find a bounce off of some of those downward support lines, I guess with time will tell, but just something that we'll keep an eye on just on the technical side of what's happening in the world.
Okay. And looking at the soybean market today, it was hanging in there early in the trade, but it just kind of fell out of bed too. And it seems like the last few days it's been an ugly market. I don't know what should a guy make of that, Andrew?
As far as what you can make of it, I think you got to point your finger at South American weather quite a bit. Northern Argentina, they've gotten some pretty decent rains. Sounds like other parts of Brazil, they're doing pretty good as well. You can tie those corn and beans together with just that the safrinha corn crop is moving along, getting planted down in South America. So I think that people are going to be looking at some of that stuff as well. Will there be a battle for some soybean versus corn acres in the US here? Looks like the markets don't care about that right now, but I think you got to be starting to look that direction here.
Talking about these grains, I know I've heard that there's a USDA Ag Forum report coming out at the end of the week. Should a guy be thinking that that's maybe going to be something bullish and hold on with their sales, or you think it's something that's going to just be more bearish news to add to the fire here, Vince?
Right now, the preliminary numbers that you see, the guess is that corn acres will be down, bean acres will be up, but the ending stocks on both would be higher. So somewhat of a bearish report. For those of you that may not be familiar with that Ag Forum, it comes out every February around the 15th to the 20th, and it's really coming in and projecting for the next 10 years, planted acres, harvested acres, yield, carry out numbers, and price projections on all the grains. And it's something we don't need in my estimation. We can't predict 1 year, much less trying to do 10.
With that being said, what are your thoughts with the wheat market? It seems like one of the grains every single day has to really beat us up, and wheat market's one of those that likes to be in that mix there. Should a guy look for a bottom in that? I know on the charts it looks like we could be finding a bottom, but is there any news to support that could maybe be the bull that leads us out of this, or what are your thoughts on that, Vince?
Right now, I don't see a lot of support. I think we've got a large Russian stock over there, record stocks. Not that the price is all that bad. They're right in line with where France and Europe are at, but US just not the, just a supplier of choice might be the best way to put it. The conditions in the Southern Plains when they're going to be coming out of dormancy is the best it's looked for the last 3 or 4 years. So I don't see a lot of problems there. If we come back in with early dormancy being happening, if we don't get some cooler weather soon, maybe we're going to get a frost in there someplace when we got the boot stage, which would do a lot of damage. But right now, the trade not really caring about that.
Something else that you got to look at with that wheat market is like Sovicon, so that'd be Russia's version of the USDA. They did come out here pretty recently saying that they were going to raise Russia's estimate of their wheat crop for the 24-25 crop. They have that estimated at 93.6 million metric tons. So they raised that thing by 1.4 million from the previous estimate. So could that be part of what we're looking at here? They do have their estimate above where the US has our estimates for them right now. So I think that's also putting some weight on our wheat market.
And with that being said, too, I've noticed that the USDA reports for the South American crop, going back to corn and beans here, have been a lot higher than some of the private export numbers. Do you think that's something that maybe could turn into bullish news in the future if USDA will lower those numbers, or what are your thoughts on that, Vince?
I guess for the most part, could it be friendly? It could. Part of what would be is how much have they decreased it? What has demand been since that point? But it sure wouldn't be negative news. And some of those estimates, as you noted, anywhere from 7 million metric tons to 15 million metric tons less, which is significant when you're looking at somewhat of a combined crop between the two of 125, 30 million.
I think with that being said, we'll roll on to the livestock here. It looks like today was kind of a healthy correction, but they did kind of close $2 off the low on the feeders there. So I don't know. Do you expect this correction to continue in the next few days, or what are your thoughts on that, Andrew?
Yeah, the cattle market, it's so tough to know exactly what it's going to want to do to us here. Like you said, is a correction needed and necessary? I sure think so. And today it's not fun to see cattle market go down, obviously, but it really needed to happen. And was today just a one down day and back to the bull run from here on out? That it's too soon to tell. Could this market, like the feeder cattle, could they drop another 10, $20 and still be in an upward trend? They probably could. Could the fat cattle drop 3, 4, $5 on the chart and still be in an uptrend? They certainly could. And I don't think that'd be a terrible thing for this market to do. So it's just a matter of how far some of these maybe funds want to take it down, and some of the technical traders, what kind of indicators they want to follow. But could this market take a healthy pullback here? It certainly could, but the numbers long term do still look friendly for the cattle market.
Mm-hmm. And so with that being said, do you think this, I'll go to Vince with this one. Do you think the pullback we saw today with the feeders at one point being close to $4 lower, some of the contracts I think even were $4 lower at some points, do you think that was more just a technical pullback, or is there more to that fundamentally that you heard out there today?
I don't think it's anything fundamentally, but whenever we've broken the cattle in here lately, we've always had great support. Opposite of the grain markets, it's in that uptrending market. When you get those, you're going to get a day, maybe a 2-day correction, then you go back. So I would think if we do not put some new lows in feeders and fed cattle over the next couple of days, it was nothing more than a mild correction before you go higher. But I think we also have to keep in mind that on Wednesday morning, Packer did buy some cattle in Texas and Kansas at 180, which is fully $2 lower than last week.
Okay. Is there any other thoughts from both of you on the cattle market here, or anything we should be looking forward to from now until next Wednesday when we put our next podcast out? Is there any news or any headlines that are coming up that you know of?
Over the
Have
course of the next few years, you'll hear Vince and I talk about where you frequently will see a high or a low for the month on the 22nd of the month. So is there something more to come in the next week or so? That will be next week, Thursday, the 22nd. So I think that's something that we'll be keeping on our radar is, did a high come in early, or do we have a low coming up here on the 22nd, or what's going to be happening in the cattle market from that just 1 month cycle that we frequently will look at?
And with that being said, too, I'd like to add that we are planning on trying to put out a update on the cattle on feed report this month too, so you can look forward to seeing that on our YouTube channel too. And with that, is there anything else you wanted to add about the cattle markets here, Vince, before we move on?
I don't think on the cattle right now, we think we covered it pretty good. Packer margins are squeezed a bit and they're going to try to take advantage of that if they get a reason to. And if they got some sold today lower, they're not going to give up on that for the short term unless they really need the cattle bad and the demand is that good.
We'll roll on to the hog market here then. It's been on a downtrend the last few days, but today it really took off. And I don't know, was there news out that you guys heard that spurred that? We'll go to Vince first.
Nothing that I heard in there, Connor. I think it more so we were coming down and checking out that $80 level in that April contract and couldn't get through it. And when you look at Wednesday's big run of triple digit gains, some of those over $3, it's either going to be short covering or new buying coming into the market, which we'll have to see what open interest does on Thursday morning when that report comes up. But for the most part, it felt more like new money coming into the market on the buy side.
I'm going to look at a June chart here. If you take your January low, which was a fairly significant one, and then you measure that up against your January high, yesterday you went just beyond a 38% retracement down, found some support on your 200 period moving average right on that line, and then it bounced back off of that yesterday, and then today it certainly did what it did here on the Wednesday trade. So I think it could have been a lot of technical movement in nature. And then, like Vince said, is there new buying coming in on some of those technical factors?
And I guess with that being said, I don't have much more to add to that hog market. But one thing I have been talking to producers about is fuel needs going into spring here in summer. I know we've talked before about the seasonal to buy fuel around Valentine's Day. What are your thoughts on that? I know crude oil is down $1.30, about $1.30 a barrel right now, but do you think it still looks plenty high on the chart? Should a guy hold off here a little bit, or what are your thoughts on if you have additional fuel to lock up here? We'll go to Vince first.
I think you got to be a little patient in here, Connor. You're coming off some highs. There's way too much uncertainty in that Middle East. But if you could get those May futures on the heating oil down into that 244 to 252 range, then you start looking at it, I think. But where it's at in these 260, I think you have to be a little patient to see if you don't get a better pullback.
Andrew, do you have any thoughts to add on that fuel market?
I farm myself, and right now my target is to get some cash farm diesel bought for around $2.90 a gallon. So if I can get there, I'll probably pull the trigger on at least enough to get me until harvest time. And then beyond that, we'll see what the chart looks like. Today, I wish I could be buying some diesel today, but I just don't quite like the way the chart is looking. So I'm sitting on my hands at the moment for the farm, and we'll see what it looks like day by day.
And I think with that, we will wrap up this episode of the podcast here. Feel free to reach out to Vince, Andrew, or me. Our office number is 996-6500 if you have any questions. And if you'd like us to talk about a specific topic or something on the podcast here, we are more than welcome to do that. You just have to let us know what your thoughts are, and we're open to feedback on what we can do to improve this. So thank you to everyone for listening, and we look forward to talking to you in the future. Thank you.